right. We've got Corbin in the house today.
Thank you.
Doing great. Corbin Claypool, Vera Mortgage, Fresno County, Central California. And Greg Wright's real estate team here in the Valley. And we just want to give a dynamic, easy to understand, 8 to 10 minute real estate market update and lending update for the greater Fresno County area of California, the Central Valley. And thank you, Corbin, for meeting with us. We know you're a busy man with appointments every day, as we are. And we just think taking 10 minutes out of our time to give people some basic dynamics so they can decide it's the right time to buy or sell real estate, right? So,
Absolutely.
So on the real estate side, what I've got is I'm going to plug 3 or 4 different areas right now, guys. So the goal here is so you understand the dynamics of the real estate market and the lending right now. And then Corbin's going to jump on. So right now we consider it what we call a neutral real estate market. Neutral. Before up till the beginning of this year, it was really more of a seller's market. But now we've entered into a stable market where you can even consider a little bit of a buyer's market because there's a little bit more inventory than there has been, as there's been a shortage. And because of that, the buyers are able to negotiate incentives on a lot of their transactions with the buyers, with the sellers, like closing cost or interest rate buy down or things like that to get into the property with very little money down or whatever their needs are, right? So right now, homes for sale was up 2.1%. What we're talking about right now is February to March. It's the end of April, but we're talking about March right now. And in about 10 days, we'll be talking about April's numbers. So we have a 2.1% increase in active listings on the market from February to March. And homes listed in March was up 14%, 13.8% more listings in March. So but that's seasonally driven because now it's springtime, the sun's coming out, people start to sell their houses. Okay. And here's the kicker. Buyers, listen to this. Homes placed under contract in March of this year was 918 units in Fresno County, up 27.9. So call it 28% compared to February. We had 28% more contracts in March than we did February of this year. Huge, right? So without giving too much more information, couple dynamics here. The average price per square foot went up from February to March, 2%. 2%. Okay. That went up, which means the houses are still slightly going up. The market in February, days on the market. So when a seller lists a property for sale, how long does it sit before they get an approved offer on average? Now we're talking about custom homes. We're talking about farms. We're talking about anything with a residence on it. So in February, it was 62 days on the market. And in March, it was 49 days. 62 days in February and 49 days in March. So the market time's dropping significantly. Things are moving a little bit better now. And that's pretty darn good. The sold price of homes was up. The sold price for homes from February to March went up 1.5% in 1 month. That's a big increase in 1 month, right, Corbin? 1.5% in 1 month. 1.5% it went up. And it was $459,000 was the closed price sale. So closed homes are selling at an average of $459,000 and went up 1.5% from February to March by the end of March. Now, I think April's numbers are going to be very similar to what we're looking at here, but I think the market slowed down a little bit, which is an advantage to the buyers. Buyers, listen to this. It's turning into a buyer's market now. Now's the time to buy. What do I believe? Now is the time. You give it a few more months and those rates start dropping, the negotiation is over because there's going to be too many buyers in the market. And so now is the time to secure your deal and negotiate with your agent to get the right home at the right price. Wouldn't you say, Corbin?
Absolutely. Yeah. Do you want me to jump in on my side?
Yeah, I've got everything. That's all we need to give them so the buyers can absorb all of that information. It's bottom line, it's the buyer's market. It's time for them to come out and buy so we can negotiate on their behalf to get them the right home at the right price. Go ahead, Corbin. Give us some of that phenomenal loan news.
Yeah, I mean, as a lender, we see a lot of different offers and a lot of different buyers putting offers on homes. And a few years back, there was multiple offers on everything, and now we're noticing that sellers are more open to negotiating price and terms and closing cost credits and price reductions and things of that nature. So if you're a buyer, it's actually a good time. If you're in a financial position to buy, it's a good time to buy a home right now because you have a little bit more power in your negotiation, which is good. And if you're a seller, and Greg, you can correct me if I'm wrong on this, but if you're a seller, spruce up your house a little bit, make it nice, do some renovations to it before you sell, make it something that's good to sell, and you'll have more buyers looking at the house. As far as interest rates are actually on the trajectory down a little bit today. They've been pretty volatile, going up and down. I use mortgagenewsdaily.com. 30-year fixed rates averaging about a 6.8, 15-year about 6.15. We're going to go FHA low sixes now, and VAs low sixes. This is nationwide average rates.
Yeah, you got a client I know real good. You just got them in a 6.125 on a VA, boss.
Yes, sir. No points.
No points. Slow down, man. Let's go.
Right. And also, if you're a buyer that, let's say you've been working on your credit for a bit, you got a 580 credit score, and if you talk to a lender and they discouraged you a little bit from trying to qualify, we just got 2 buyers this month funded and closed on their homes that had 580 credit scores. One had a mortgage late. One had some other issues. We're able to help them address those issues and get them in a home within 30 days of coming to us. So don't be discouraged if a lender gives you bad news, right? Just be encouraged to maybe get a second opinion from us so we can take a look to see if there's anything that maybe the other lender missed, because we're all human and we miss things sometimes. So it's always good to get a second opinion. But that's kind of the trajectory on rates right now, guys. Rates are headed downwards a little bit. I'd like to see them get into the 5s eventually. Maybe that will happen in the next year or so. Nobody really knows. But that's my update.
Well, I was going to ask you, as a lender professional, what is your economist saying on your side where they think the interest rates are going to be the rest of this year? What do you think is going to happen? I know you don't have a crystal ball, but give us your best educated guess.
If I had to, get my crystal ball here, if I had to, make a good educated, guess on this, I'd say that rates are probably going to stay pretty stagnant through this year. I think maybe they'll come down a little bit in winter like they historically do. I think next year rates will come down. I don't think they're going to come down to 3s. I don't think we're ever going to see 3s again. We have to remember that when we had 2% and 3% rates, the government was going in and buying mortgage bonds, which causes the interest rates to drop. The government is not buying mortgage bonds anymore. So the likelihood of things getting down to 2 or 3% unless a economic crisis happens or something of that nature are very, very, very slim. So we're probably going to see things maybe in the 5s, hopefully next year. I think the perfect scenario would be conventional rates in the 5s and government rates in the high 4s. This has been a tried and true proven market that me and you have been in, where you're busy as heck. People are buying, but it's not so crazy that you're inflating the values 10 to 15% in a year, because actually, even though it's kind of fun to be in that market as a lender or real estate agent, it's really not good for the real estate health economy overall for it to appreciate that fast. We want to see that normal 5 to 7% appreciation. So that would be my take on where the interest rates are going to be. I've been wrong before, guys. Rates are so hard to determine because it's so many different things at play that determine what a mortgage rate is going to be for the day.
Absolutely. Well, that's great stuff. So slightly going up. It's there's more inventory, so it's a little bit of a buyer's market now, where we're getting buyers' closing costs paid and more sometimes. So it's a great time now. Let's do that.
Well, one thing I want to add is I saw a viral post going on social media that's actually, I even saw it in a presentation at an event, and I thought the person should have done a little more research before posting it about how foreclosures are going way up. And this is not the case. On single family homes, which is what makes up most of real estate in the United States, the foreclosure numbers are not going up drastically. That exact stat was actually on multifamily, which is a completely different category because that's the investor side of things for the most part. So I just wanted to add that in there, Greg. I'm not sure if
clear
you've
that up
seen
a little
that
bit
slide.
more because I just so the investors know, I do multifamily up to 240 units. I sell them, so we've got it. We have an inside line. However, you're right. The foreclosures are up a little bit, not a lot, on the multifamily. Why is that? Because every 10 years on a commercial loan for multifamily, you have to refinance out of that loan. And whatever the rates are at that day on that 10-year cycle, you got to be okay with, or you got to sell that. You got to sell those apartments. It is what it is. That's the way it works. 10 years. So a lot of these people bought at the 4 or 5% loan rate, right? Remember, multifamily is about a point higher to a point and a half higher than a residential loan, point to point and a half. So they bought at 4%, let's say 5%, and now their rates are going to be, 8.5, right? On a apartment building, and now they're stuck. They have to do it, so they have to reposition that on a loan, refinance it, and because they're used to making this income on these lower rents, and they didn't raise their rents right over the years, like a lot of landlords don't do. Now that higher interest rate puts them on a negative or very little profit, so now they're losing those properties because they didn't do good business. And a lot of it's got to do with the owners, landlords not raising their rents at 4% a year to cover those, to get those profits up where they need to be when you reposition that to a higher rate of the day. So there's opportunities in the multifamily. I've never seen this many multifamilies. Fresno in the valley floor. I just pulled them up yesterday for an investor, and there's a ton of them. They got some good deals out there right now. It's incredible. Anyway, that's a separate note, but Corbin, you're right. And there is foreclosures going in on that, but there's not a lot. There's just a few. Yeah, it's not happening on the residential. People have to qualify too much. But okay, well, let's rock and roll. What's your contact information, Corbin? Corbin's number, he had to get off, it looks like, is 559-313-5819. Corbin Claypool, Vero Mortgage, Fresno, 559-313-5819. Call and text Greg Reitz, real estate professional, right here, right now. 559-260-1777. 559-260-1777. There he is. He's back.
Lost you. Sorry, guys.
Anyways, call Greg Reitz, Real Estate Pro, 559-260-1777. Any questions on anything? We've got the answer from farm and land, development land, build your own home. Resales, obviously, our number one category. Farm and ag, multifamilies, manufactured. Let's go. We got it. We've got the home, and Corbin's got the loan. 559-260-1777 for G-Money. Go ahead, Corbin, give it up.
Yep, 559-313-5819. Feel free to reach out. We'll do anything residential loan related to help you get qualified to buy.
Let's go. All right. Thank you, Corbin. It's been a great day. I'll talk to you real soon.
Thank you for having me on.